Hello everyone, future applicants. Welcome to this tutorial for the Innovation Fund Hydrogen Auction Call 2025. I am Claudia, and together with my colleague Luc, we'll introduce the Financial Information File, or FIF, template prepared by our financial engineering team in CINEA. This file, also called the Detailed Budget Table or Calculator, is a mandatory template to be submitted as part of the application to the 2025 Hydrogen Auction Call. Today, we will explain what the financial information file is and its objectives. Then, we will go through an illustrative worked example. And finally, we will provide guidance on how to submit further questions to the help desk and where to find additional information. Let's start with a brief word on the financial information file and its purpose. The financial information file is a mandatory part of your application, which you can find on the Funding and Tenders portal of the European Commission. This fifth model builds up on the previous template, adapted to the new topics introduced in the 2025 call for RFNBO and electrolytic low-carbon hydrogen. Please note that it is compulsory to use this specific version of the FIF. Templates from previous or other Innovation Fund calls cannot be used. The FIF model collects applicant information in the standardized format to enable a consistent assessment of the credibility and soundness of each project's financial projections. The template may not capture the project's intermediary assumptions or calculation used by applicants. In practice, you may rely on supplementary worksheets or your own detailed financial models. You may present additional documentation as annex to the application. However, a fully completed FIF is still required. Proposals missing the completed FIF template will be rejected. Please note that for your convenience, we made significant effort to design a model which is user-friendly, with an aim to simplify its use from your point of view. Applicants need to fill in one input tab, including justification for warnings, if any, in the Model Check tab. We added automatic checks with error and warning messages to flag potential issues directly as you type in values. Hence, applicants can focus on main operating parameters, while most parts, such as the balance sheet, performance indicators, IRR, NPV, and sensitivity analysis, are automatically calculated. And now I give the floor to my colleague Luc to walk you through the financial information file.
Thank you, Claudia. My name is Luke, and I will now walk you through a fictive illustrative example of a financial information file for a project producing both RFNBO and electrolytic low-carbon hydrogen. When you open the FIF, the first tab you will see is a disclaimer. Please read carefully the disclaimer of this model in the first tab. Next is the Instruction tab, providing guidance on how to complete the template. Key points to note. The template includes sheets in different colors, with one tab to be filled in by you, highlighted in blue, the FIF Inputs tab. This is the core of the template, based on which the model calculates the consolidated indicators, summarizing key data in the tables included in the FIF Outputs, FIF Charts, and Part C support sheet. In the Input tab, please fill in only cells highlighted in yellow, following the details provided either in the description of the cell and in the notes. Values should be filled in with the correct sign. For example, ensure revenues have positive signs and costs have negative signs. You may notice the reminders in column H. Monetary units should be consistently filled in thousands of euro. The model needs to be completed for the entire lifetime of the project, covering the whole expected operations duration, and not only for the first 10 years of disbursement of the grant under Innovation Fund. Regarding hydrogen volume, don't fill any hydrogen volume before entry of operation date, as this cannot count to compute the Innovation Fund grant amount. The model is based on calendar years. Always fill the volume produced during the calendar year, so that for the first year of entry of operation, if the project starts on May 1st, enter the volume produced between May 1st and December 31st. So 245 days out of 365. Then, during operation, fill in the amount of production during 12 months of production for each calendar year. And when the project reaches end of disbursement, fill in the full amount produced during that calendar year. So 365 days of production. And the model will automatically capture for innovation grant calculation purposes only the relevant days of that year, which would be 182, to complete exactly 10 years from entry of operation to end of disbursement period. Moving to the FIF Inputs tab. First, input your project name in cell G7, and then below select the country in which the project will be implemented. Next, fill in the project timing. Project start date would typically be December 1st, 2026, which is the first day of the month following the anticipated signature of the grant agreement. So unless justified otherwise, please skip this date. Note that the financial close date in cell G17 should be at the latest 2.5 years from project start date, while entry into operation date in cell G18 should be latest 5 years from project start date. End of project lifetime in cell G22 is the date of which the project reaches end of life, and it is often much longer than the 10 years of innovation grant disbursement period. We continue with the WACC parameters. For the computation of the WACC, most parameters are pre-populated based on public available data, of which sources are mentioned in the notes. Nevertheless, applicants are allowed to modify all WACC parameters by adding a justification in the corresponding row in column I and in the application documents. Input the interest rate for the shareholder loan, senior debt, and junior debt facilities where applicable. If the project does not use a specific debt, then keep interest rate at 0. The corporate tax rate in G37 is automatically calculated depending on the country selected and based on public data available. Risk-free rate is pre-populated based on the country. And as per Innovation Fund guidelines, a beta levered is 1 by default. Equity risk premium is 6% by default. And innovation risk premium is by default 2.5. Moving forward to the auction parameters section. Select the call topic in cell G45, which is either topic 1, which is fixed premium auction for RFNBO hydrogen production, or topic 2, which is fixed premium auction for RFNBO hydrogen and or electrolytic low carbon hydrogen production, or topic 3, which is RFNBO hydrogen and or electrolytic low carbon hydrogen production for maritime and aviation. Then fill in the bid amount in cell G48, which is limited to 2 decimal digits, in euro per kilogram. Note that if you insert a bid with more than 2 decimal digits after the comma, the model will signal an error and will truncate to 2 digits, and this value will be used as the official bid price. The maximum bid price allowed is 4 kilograms. Expected annual average volumes for RFNBO hydrogen and electrolytic low carbon hydrogen and semi-annual in cells G50 to G53 are calculated automatically based on volumes which are input in the P&L revenues section. Electrolyzer capacity should be filled in cell G54. This is the total full capacity, whether it is used for RFNBO or low carbon or non-RFNBO production. In the following section, there are a set of additional electrolyzer parameters that should be entered. Electrolyzer technology should be selected in the drop-down menu of cell G57. Common combinations are preset in the drop-down menu. Electrolyzer stack efficiency should be filled in cell G58, which is the efficiency in kilowatt-hour per kilogram at the moment of entry of operation. It is defined as the electricity consumed purely by the electrolyzer stacks. So neither the balance of plant nor the entire plant, such as lighting, etc. in kilowatt hour to produce 1 kilogram of hydrogen. If several technologies are employed, then enter the combined efficiency. Enter average stacks annual degradation in cell G60 as the average yearly percentage efficiency loss of the electrolyzer. You should enter the percentage as a positive value. Enter average stacks replacement interval in cell G61, which is the number of years between replacement of stacks. So for example, if stacks are to be replaced every 10 years, then enter 10. Please fill in whole numbers only here. Full load hours should be filled in cell G62, which is the equivalent operating hours that the electrolyzer would operate at full load within 1 year. The model will then check if the parameters entered are within a reasonable range of 20% from calculated values based on electricity consumed exclusively by electrolyzer as introduced in row 223 and hydrogen volume produced. The grant amount in row 76 and completion guarantee value in row D78 rounded to 2 decimal digits are automatically calculated based on the bid price and volume of hydrogen within 10 years of disbursement period. Depending on the topic, either only RFNBO hydrogen or RFNBO and electrolytic low carbon hydrogen will be used for the calculation. The completion guarantee is set to 8% of the grant amount. Moving next to the profit and loss account, the P&L. In the revenue section of the P&L, there are two parts to be filled. Revenue from products, which is the hydrogen, and revenues from byproducts, such as heat, oxygen, etc. Revenues from hydrogen production is split into three parts: RFMBO hydrogen, electrolytic low carbon hydrogen, and the remaining, which is non-RFMBO hydrogen and non-electrolytic low carbon hydrogen. In the RFMBO hydrogen part, rows 93 to 131, as of column I, enter the price in euro per kilo and the volume in tons of hydrogen in the respective rows. RFMBO hydrogen may be filled for all three call topics. There are 7 offtake options which may be filled, of which the first 3, so 1 to 3, are those revenues to third parties backed by offtake evidence. The fourth is hydrogen consumed internally and backed by evidence. And the last 3, 5 to 7, are hydrogen which are not required to be backed by evidence. In addition, please select also the sector, for example, industrial, and only then select the subsector, please, for example, cement and lime, in which the hydrogen is sold. Just a reminder, do not fill any hydrogen volume before entry into operations. In the next part, in electrolytic low carbon hydrogen, which is rows 133 to 171, enter the price and volume, like before. If you selected topic 1, electrolytic low carbon hydrogen should not be filled. This section may only be filled for topic 2 and 3. Similarly, there are 7 offtakes options which may be filled, of which the first 3, 1 to 3, are those required to be backed by offtake evidence. The fourth is hydrogen consumed internally and backed by evidence. And the last 3, 5 to 7, are not required to be backed by evidence. In addition, don't forget to select the sector and the subsector in column D. For non-RFMBO and non-electrolytic low-carbon hydrogen part in rows 173 to 186, which may be filled for any topic, enter the price and volume. There are 2 offtake options which may be filled, and please also select the sector and the subsector in column D. Then for revenues from byproducts in rows 188 to 208, you may enter price and volume for byproducts such as heat in rows 190 to 193, oxygen in rows 195 to 198, and then grid income in rows 200 to 203. If other products are produced and sold, please enter the price and volume in rows 205 to 208, and then please add the price unit in cell F206 and the volume unit in cell F208, for example, tons, and in the price, for example, euro per ton or euro per kilo, and then add a short name or a short description of the byproducts in cell 205. Then moving on, enter the sales of CO2 emission allowances in row 210 in thousands of euro. The Innovation Fund grant is automatically calculated as mentioned before, and then it reappears here in the P&L in row 212. Next, in row 214, enter any grants other than Innovation Fund, and in addition, there is a drop-down menu in column D in which you can select if any grant is taxable or not taxable. By default, grants are assumed to be taxable income. In the cost section of the P&L, there are three main parts to be filled: cost of goods sold, other operating expenses, and selling, general and administrative SGA. In row 223, enter the power consumed by electrolyzer during lifetime. This should be the power consumed purely by the electrolyzer stacks, excluding balance of plant and excluding plant-related electricity. This row is used to cross-check the electrolyzer parameters explained before in rows 56 to 63. Just as a reminder, the costs per unit should always be filled with a negative sign. For cost of renewable power, in rows 225 to 287, enter the price in euro per megawatt hour, in a negative sign, of course, and volume in gigawatt hour in the respective rows. Please enter grid fees and taxes in thousands of euro in the dedicated row, which should be separated from the cost per unit of electricity. Renewable power may be filled for all three call topics. There are 7 power sources which may be filled, of which the first 3, 1, 2, 3, are those required to be backed by PPA evidence. The fourth is power sources from own power, such as own solar farm, and should be backed by evidence. And the last 3, 5 to 7, are renewable power sources, which are not required to be backed by evidence. In addition, please select the sources of power in column D from the drop-down menu. Here we only have one drop-down menu, so select grid, for example, solar PV or other. For non-renewable power costs used for low-carbon hydrogen production in rows 289 to 343, enter the price and volume, as well as separately the grid fees and taxes. Power costs for low-carbon hydrogen production may be filled for topic 2 and 3. There are 6 power sources here which may be filled, of which the first 3, so 1, 2, 3, are those required to be backed by PPA evidence, and the last 3, 4 to 6, are power sources which are not required to be backed by evidence. For non-renewable power costs used for other hydrogen production in rows 345 to 364, which may be filled for any topic, please enter the price and the volume, and separately the grid fees and taxes. And here there are 2 sources which may be filled, 1 and 2. Now, for other COGS, cost of goods sold, enter water cost consumed by electrolyzer per unit, so in euro per meter cube, in row 369, again in negative sign, and water volume in thousandths of meter cube in row 371. Enter any hydrogen transport and/or storage cost per unit in row 374, and volume in rows 376. And then please specify also the units in column F. Any other cost of goods sold should be filled in row 378 to 386. And don't forget to specify the units in column F. You may also change the labels. Other OPEX such as maintenance in row 389 or labor in row 390 or any miscellaneous OPEX may be filled in rows 391 to 394. SGA and other costs such as insurance may be filled in rows 397, lease or rental in row 398, or any other administrative costs in row 399 to 402. Below EBITDA, in the depreciation and amortization part in rows 407 to 419, only enter the number of depreciation years in whole numbers, so integers, in column D for each CapEx item. The model then automatically calculates a straight line depreciation starting from the entry into operation year. The years entered should not be longer than the project's total number of operation years. Interest expense and fees in the P&L are pre-populated with links from the cash flow statement. If financing expenses in the P&L are different than paid in the cash flow, applicants may modify the calculation under this entry, interest expenses and fees, in rows 424 to 428. And the balance sheet will automatically adapt using accrued financing expenses. P&L taxes are automatically calculated based on corporate tax rate applied on EBT. Moving to the cash flow statement. In the cash from operations, this is automatically calculated and it includes the sum of EBITDA, working capital needs, and cash taxes paid, all automatically calculated. For working capital, please enter days outstanding, which is in the balance sheet, in cells D524 for the inventory days, in D525 for the accounts receivable debtors days, and in D536 for accounts payable creditors days. And then the model will automatically calculate the working capital requirements. In cash flow from investments, for CapEx in rows 446 to 479, several categories are suggested, such as development costs, procurement of equipment costs, construction costs, and on-site power plant, and the last but not least, contingencies. Each category has several cost types which are recommended, and applicants are encouraged to enter costs in the right category and type. Nevertheless, only if costs types within each category do not correspond to the way you work, you may adjust the labels in column C, marked in yellow. In row 481, enter your maintenance capex, which may be required, among others, for example, to replace the electrolyzer stacks. And moving to cash flow from financing, please enter the projected equity injections in row 486 and/or the shareholder loan drawdown in row 487, all with a positive sign since this is a positive cash flow. For debt financing, enter the drawdowns for senior and junior debt in row 490 and 491, again with a positive sign. Equity distributions should be entered with a negative sign, which is negative cash flow. So for example, for dividends in row 498 and/or the shareholder loan principal repayments in row 499. Please note that the shareholder loan interest in row 500 is automatically calculated based on the interest rate you entered in the WACC section above. Debt service coverage ratios, so DSCR, are calculated for your convenience in row 494, this one using only senior debt service, and in row 495, this one using both senior and junior. For debt service, please enter principal repayment and bank fees in rows 503 and 505 for the senior debt, and rows 508 and 510 for the junior, all with a negative sign. Note that the interest rates also for the senior and for the junior are automatically calculated based on the interest rates you entered in the WACC section above. In the debt service reserve account, the SRA, and maintenance reserve account, MRA, you may enter deposits with negative sign and withdrawals with positive signs in row 513 to 514 for the DSRA, and in row 515 to 516 for MRA. Remember that any deposit to those accounts which consumes cash should also follow with a withdrawal, which liberates cash, in such a way that total deposits equal total withdrawals. The balance sheet, which is in the bottom, is automatically calculated based on the values entered in the P&L and cash flow statements. And as mentioned, for proper calculation of working capital, the only thing you need to fill in here is the values for days outstanding for inventory, accounts receivable debtors, and accounts payable creditors days in the respective cells. Moving to the Outputs tab. Here, all values are automatically generated, and applicants should not attempt to modify any cell in this tab. In the first section, KPIs, it provides an overview of average unit price and yearly average volume of the bidded products of the auction. For unit price, a weighted average of the first 10 years as of entry of operation is performed, while the volume is averaged by the number of operations years from entry into operation until end of life. The sources and uses table in section 2 provides an overview of cash spent, which is the uses, and cash from financing sources, which is the sources, during the project lifetime. Total uses and sources should balance. And there is a balance check in row 75. In addition, there is a check for any gaps in financing sources in row 74. And if there is any error, applicants are required to check for negative cash balance in the balance sheet and rectify it, for instance, by adding to the sources of financing. The IIR analysis in section 3 provides an analysis of two cases. One case without Innovation Fund grant and the other including Innovation Fund. Note that any grants other than Innovation Fund are included in both cases. Moving to the next tab, the FIF charts. Here you can find 4 charts which may be useful for you. And the last tab, the FIF model check. Here there are 3 types of checks: eligibility errors, error checks, and warnings. Eligibility errors must be rectified by the applicant, as these parameters are directly linked to the bid parameters, and the application may be disqualified if one or more of your bid parameters are not eligible according to the call text. Error checks must also be rectified, and as an example, if a sign was inverted by mistake or if the balance sheet doesn't balance, this will trigger an error. And in the last section, the warning check, applicants are encouraged to fix warnings if they appear. And you may justify warnings if they appear and you are not able to correct it by entering your justification in column J from rows 233 to row 259.
Thank you very much for listening to this tutorial. We hope it was useful for you, and don't hesitate to use the help desk and send us your questions. The help desk link is available in the Funding and Tenders portal. When submitting the question, follow the provided instructions carefully. Read the published hydrogen auction Q&A before sending the question, as many details are already covered there. Be concise and clear, including only the project information necessary to answer your question. Do not ask questions about our programs or questions requiring opinions or judgment, as the help desk will not be able to provide answers to these cases.
This slide provides links to Innovation Fund calls.
You can also find information on upcoming calls, recorded webinars, and tutorial videos for further guidance. Thank you for listening and for your interest in the Innovation Fund. We wish you good luck with your future application.